Yeah.
Apologies, were you all able to hear me? I forgot that I was ranting all over the place. Smithers, can you hear me? If you could just say yes. I know we're
Yes,
connected
I
on.
can hear you now. We can't see you, but we can hear you.
Apologies, I was just ranting to myself. I'm going to start off all over again. So good evening, everyone. We're apologies for the delay. We're just kicking off. It's a new machine that I'm dealing with, so not very handy with MacBook. So please apologies for that. I'm Nurulan, and I'm the ACCA manager looking after ACCA's marketing portfolio based out of Islamabad. And so a very warm welcome to all of you who are joining in the call today. We have with us Kabir Naqvi, who is an ACCA member. He's a champion in his field. I have known him the last 8 years for being a role model of all the values that ACCA has been asking you to elude. So ever since that you become an ACCA student, we talk about innovation, we talk about accountability, we talk about diversity, we talk a lot about ethics, and we talk a lot about becoming a complete finance professional. So all the things that we have been talking about and you have been studying about all these many years, and all the things that you will be encountering in your professional careers. We have a live example, somebody who's gone through that. So Kabir has been an advocate of these values, and he has had a fantastic career. And he has a fantastic story to share, which has a lot of lessons for those who want to learn it and take it as a lesson learned or as a success story. So over to you, Kabir. He's heading U Microfinance Bank here in Islamabad, and I'd like to encourage you all to take this opportunity to ask as many questions as you can with regards to your professional careers, with regards to the topic at hand, and just be very, very vocal and be very, very interactive. So over to you, Kabir.
Thank you. Thank you for a very generous introduction. Hello, everyone. I hope you can hear me loud and clear.
Midit, are we okay with the sound? We're counting on you.
Yes, we are absolutely okay with the sound. Are we going to project anything? Are you going to turn on the webcam?
No, I'm going to go extempore. We'll talk
Okay,
about the topic.
so no webcam? Okay.
All right. So the topic today is FinTech. Everybody's talking about FinTech revolution globally as well as in Pakistan. It's sort of the flavor of the month. I'm going to develop the landscape context in the Pakistani context, the whole thing. Pakistan is a country of about 200 million people. The official number is between 180 to 190, but the feel is, because we are very close to the field, is about 200 million plus people. Out of that, banking penetration in Pakistan is about 12 to 14%, unfortunately, after 70 years of banking. So essentially 86% plus of our country is unbanked or is in the cash economy. So the larger banks, and I will not mince my words, have just been getting fatter and fatter because of deploying bulk of their funding in government treasury bills, and that's why the overall rating for the Pakistani banking sector has gone down last 2 years also, because they've just been funding the government, and consumer banking is shrinking, unfortunately, in Pakistan, whereas there is a lot of potential. So this is where players like us, like U Microfinance Bank, kick in. Everybody has been hearing a lot about branchless banking here also for the last 8 years. And in fact, Pakistan is privileged to have launched the first ever bank-led branchless banking model in the world, which is by the name EasyPaisa. And I have the privilege of being part of it 7 years back when we launched it. And now we have a similar model here at UBank by the name UPaisa. Many of you must have heard of that. But that's currently doing domestic remittances and bill payments at about 75,000 to 80,000 retail agents of telcos. FinTech, coming to now that we have identified the universe of 200 million, 86% being unbanked. The other interesting thing here where the opportunity lies for FinTechs is the difference between tele-density and banking density. In Pakistan right now, if you remove duplicate accounts, you have about 21 to 27 million bank account holders and about 120 million cell phone users. So essentially, the difference between the bank account holders and the cell phone users is where the opportunity lies, because these people are already in the telco net. And the vision 2007-8 was, as well, when we started off with the EasyPaisa, back when I was at Tamir, was to make the cell phones bank accounts and get all these people and or bulk of these people into the banking net. And we've achieved a lot over the last 7-8 years, but still a long way to go. A long way to go, because primarily the market is doing over-the-counter transactions and the mobile wallets did not kick in. We have about 15 million mobile wallets, and out of the 15 million, I'm talking about the whole industry, only 1 million are active right now, which is not where we would like to be. Talking about fintechs, I'm sure you people are reading up a lot about fintechs and partnerships and fintech. What is the concept? I'll just talk about the concept a bit. As I mentioned, larger banks or even smaller banks are stuck with the bricks and mortar branches, conventional way of lending and getting deposits or servicing customers, via their financial centers or branches. Fintechs are very agile organizations. They can innovate, and the idea is a partnership with larger conglomerates where they can sit on the balance sheets of, per se, a bank or an FMCG and formulate linkages. And I can give you an example. For instance, many of the larger banks in Pakistan are not going for a separate license to offer branchless banking, at locations other than their bank branches, but fintechs are helping them innovate, and link those banks to other banks or microfinance banks or telcos, to form those linkages and reach out and increase the outreach. So that is the primary role that you're seeing that is evolving in Pakistan as well at the moment. Coming to UBank, the role that we've played so far, we are a 4-year-old bank, and we've really started scaling a year back. And our balance sheet footing is about 10 billion rupees, which is pretty decent for a microfinance bank, from 2 billion rupees last year. So we've grown pretty fast, but we've maintained our delinquencies while growing so much. And we plan on to continue this growth going forward also. The advantage that we have as a microfinance bank is that we are quite agile. We are lean. We rely heavily on technology, and it is a natural partnership. When I talk to all these fintechs that are evolving in Pakistan, it is very natural, because if we were a very large institution, and say a 50-year-old institution with 14,000 employees and 1,200 branches, the whole concept of dealing with somebody who has a company with 25 people and is talking about innovation and has very less capital, many of those people will not be even taken seriously. So we have the advantage of being lean and agile ourselves, and we're scaling. So it is a natural partnership with fintechs and us. And I can name a few. There is a fintech by the name Finja, based out of Lahore. As we speak, we're in the process of integrating our mobile wallet of UPESA with Finja's mobile wallet to increase interoperability, because I myself am pretty much a free market person. It's a many-to-many market. That's what the customer demands. The one-to-one models will not work. Everybody will have to open up their networks and connect them, so more and more people can come into the net. So this is the story of UBank, of the market size, and I am open to a more interactive session. Feel free to ask questions and we can take it from there.
Medad, if there is anybody who would like to ask a question and we can unmute them and they have the microphone, feel free. We can unmute from here, or Medad, you can do so from Karachi, and we can ask them any kind of questions that we have. So, go ahead. While everybody's thinking about the questions, I have a question, because I'm very new to the topic and I'm taking this as a learning opportunity. I was only supposed to be here for 5 minutes, but you've gotten me hooked to the topic. Any industries that are actually you're focusing on with regards to getting them as partners into the fintech? So is it, for instance, in the layman term, I would assume that a lot of agricultural partners want to use mobile banking as a key tool. So remittances and transferring money. So do we have like a sector-wise breakup as well?
Yeah, I think fintech, you've asked the right question. Fintechs are helping us in developing the ecosystem. You see, when we talk about bringing people into the net, what's missing today? Our cash economy, by the way, is doing very well. Unfortunately, we're not making anything of it because it's cash. Ideally, we would like all that money to be in the banking net. And so it has a multiplier effect on the GDP also. So the industries we're talking about already is, yes, the whole concept of mobile accounts or mobile wallets and reaching out was to convert the cash economy
into more of a
bank economy. Like, and the marriage between a microfinance bank and a telco 7 years back, Telenor and Tamir, was not a coincidence either.
Yeah, of course.
And I'll talk more about it. Why? Because it makes complete sense. The average remittance size of 30 billion rupees that are going through this network every month, 22 million transactions, is 4,700 rupees.
Wow.
A person who transfers at an average 4,700 rupees to his mother or wife in a small town is not a commercial bank customer.
Yeah.
It's a microfinance bank customer.
Absolutely.
Right?
Absolutely.
So whereas I usually give this analogy कि अगर वो shampoo की बोतल बना रहे हैं तो हम sachet बना रहे हैं.
Yeah. Yeah.
Right?
So the product size is
absolutely. So we're mass bankers that way. Where fintechs kick in is that we have FMCGs, we have likes of Nestle and other companies that are using large distribution networks, and they're pretty much using the conventional brick and mortar banking network to have settlement accounts, and the farmer goes in, and deposits money and gets a check and all. That's primitive, if you ask me, and that's not efficient at all. The world has moved from that. So this is where. So we're talking about everybody and their brother, to be very honest. But everybody is going to benefit from this because cash is the most expensive mode of dealing.
Yeah.
You see? So when likes of Bitcoin and all, I read about a lot of stuff there as well, and so we're getting there. It's a new concept for now, using like Bitcoin as a blockchain technology as currency. Well, we are a highly regulated market. That's going to take some time, but that is the eventual state. We're going to get there.
So what if I was to categorize it like this, that what would be the role of a microfinance bank like you bank? What should be the 2-year goal? What should be the 5-year goal? And specifically with regards to the regulator,
right?
What kind of support are you guys getting? Because if I remember my research from when I was interning 10 years back, it was on microfinance, and it was just a new concept back then. We were just thinking about, what is the potential. And there was 2 banks, to be precise, and I can name them, ZTBL and Khushali Bank, who was just trying to actually go into the market and see what is the concept of, microfinance. So what is your short-term goal, and what is the 5-term vision?
Yeah. So as a country and as an industry, we've achieved a lot over the last 10 years. You're right. And Khushali Bank or ZTBL were all government-funded banks. And it was a good initiative by the government, both these banks, but they opened up the space for private players to get into the market also, right? Now, likes of Tamir and Finca and Ubank and Mobilink Bank they have proven that it is a privately owned, sustainable model that works very well, and I think all of these banks are in profits, including Ubank. I'm happy to share that. We have been making money as well. So, and we have a commercial motive, which is fine. Because for sustainability it is required. So as a microfinance bank, the biggest edge we have is the clientele. The thing that needs to be focused on, nobody has thought about the client over the last 60-70 years, unfortunately. You go to a bank and you ask for a loan. They say, okay, give me collateral which is worth more than the loan amount. If somebody logically had this much collateral, why would they come to you for a loan in the first place? Right? So we give unsecured loans based on the cash flows of the small entrepreneur or the farmer. Yes. And interestingly, the delinquency level in our market is less than 2%.
Wow.
Yes.
So it's sort of like following the Grameen Bank model,
Absolutely. Yeah. It's a hybrid between the Grameen, because that was purely community-based group lending. We are individual lenders, and we are highly regulated, unlike Grameen. But the repayment behavior is fantastic. Right? So we have 4 million borrowers right now, which is not much. The whole industry, 111 billion rupees of outstanding portfolio. Ubank has 5.5 billion of that, because we just started off. And there are 11 banks, microfinance banks, and 37 MFIs that are not banks and not regulated by the state bank, but the clientele is the same. So the role of the microfinance bank is very natural. Why? Because the clientele you're serving, the segment of the society you're serving and want to bring into the payments net and all of that is our customer. So it makes complete sense when I go to a remittance customer who's remitting, say, 4,700 rupees, he or she needs my 40,000 rupee loan. He or she needs the high interest bearing deposit and the insurance, medical and life insurance. So all of that is bundled, and this is how we're bringing people into the financial net, and this is exactly what financial inclusion means.
Inclusion means, which was bringing me down to that point that we're hearing a lot of discussion around creating financial literacy and making people, very adaptive. I would also like you to mention to the larger audience for their interest as well that there is a lot of work that is going into financial literacy. What opportunities could arise for accountants, let's say, who want to pursue entrepreneurship as a option?
Yeah.
What opportunities lie under the creating financial literacy laws?
So yeah, so this is very close to my heart because I'm also an ACC member and I'm an accountant.
Yeah.
But I'll be very frank, this can become your curse also.
Yeah.
When people just categorize you in a particular category that you're a back-end person, you're a bean counter. A lot has been written, a lot has been done over the last 20 years to counter that, but we still have a long way to go. It's a mindset issue. So I can give you my own example, right? So, and I'll be very open. When I was taking over UBank last year, the regulator, the biggest concern they didn't have any concern because I had already spent 9 great years at one of the leading banks here, and Tamir Bank. But they were like, are we sure whether an accountant can run a bank? Even if he was CFO, even if the bank did very well, even if he was sitting in all board meetings and was making the strategy and was involved in the nuts and bolts of that bank that did so well, he was involved in the launch of EasyPaisa. But you know what? He's an accountant, after all. So that was one of the barriers that I was facing, but obviously it's a personal thing as well. I took it as a challenge. I still came. We turned this bank around. And one thing I will share with the people who are listening to me right now, the day I was boarding the plane from Karachi to Islamabad, from my CFO life to the life of a head of an institution, I had to take the CFO hat off. The skill set that I had has really helped me turn this, I never say I've turned this around, the team has turned this around. It's never a one-person thing. But in my particular role, the accounting skills that I had, which are a means to an end, not an end in themselves, right, helped me greatly because I had a great understanding of how the balance sheet works, how the revenue drivers work, what are the cost drivers, how will the jaws open, all of that. So my message to people who are listening to me is that yes, it's a great means to an end. You can play a very vital role because if you pick up any business, let alone microfinance, commercial banking, FMCG, shipping company, whatever, whoever understands the nuts and bolts of that business in terms of the revenue generation and the cost is the person. So use this wisely. Don't get stuck in roles of finance only. Finance is great, but you have to move on from there also and use that skill. So entrepreneurs potentially I feel can do better, who have the accounting skill than people who would have to rely on other people to understand the implications of their decisions. Yeah, that's how I feel about it. It worked for me.
Great. Any questions so far? I can't see the chat button, so I'm not too sure. Maybe you are getting the questions.
I don't see any questions appearing on the chat. However, just to add, I'm pretty sure these are the kind of questions they would want to ask. So, Kabir, if you can highlight, are there any plans for starting Islamic banking for the microfinance banking sector? Maybe this is what our affiliates would want to know.
Yes, Midhat, it's a very good question. We have a license category in Pakistan for an Islamic-based microfinance bank. That's been there for about 7-8 years now. Few banks have tried to venture into it as well, namely NRSP Bank. So there are 3 categories. Either you can be fully Islamic, or you could have Islamic dedicated branches, or counters at your conventional branches. So the commercial banks even who are Islamic like Mizan Bank and DIB, the only bit they've been struggling with is that the asset book based on Islamic banking, they've been struggling to build an asset book. So you can get a lot of current account deposits, but deployment is an issue in Pakistan right now because we haven't been able to crack that and make innovative products because the bank has to have both sides of the balance sheet. If you go Islamic right now, you can raise a lot of current account deposits. But deployment in Islamic-based lending products, the market has been struggling with. But There is a lot of room. In our market particularly, we have done surveys that how many of our clients would like to deal with us in an Islamic mode, and we've got a great response on the lending side as well as on the deposit side. So going forward in our medium to long-term strategy, if not fully Islamic, bank, I can talk about ourselves, would really want to explore dedicated, would want to pilot branches in particular areas where we can offer this one, because this is the market demand is there. But commercially, it has not made sense so far.
Okay, great. Taking forward the same question, I received one from Umar Farouk. He wants to know what kind of positive implications would the current economy or would the current economic structure in Pakistan would see based on Islamic banking?
Okay, you see, if you dimension it, if you look at the total money supply from the deposit, because there are two sides to inclusion. One is the total money supply in the formal sector, and then deployment of that money in loans and all. So total money supply is about 3.7 to 8 trillion. In the banking sector, another trillion plus is lying with the national savings, and the feel is about 2 trillion or 2.7 trillion is lying outside in the cash economy. That is the universe. The numbers are a bit dated, but we're hovering around the same. That's the money supply. Now, interestingly, what's in cash, just let that be. Whatever is it with the banking sector, and I'll come to the Islamic discussion also, but I'm just making putting things in perspective. On the lending side, consumer lending, as I mentioned at the start of the talk also, has been radically reducing, because the SME lending that started, the delinquencies went as high as 35%. The SME bank that was there, government went down, went under. All the other banks that tried going towards the SME sector, they burnt their hands. The microfinance sector was not picking up until 5-6 years back either. It is only now that the influx is there. So this is where we are. So consumer lending in the current environment, and I can share some very interesting numbers with you. Bank gave 6.8 billion rupees of consumer loans, 130,000 loans in 2016 with an average size of 45,000, whereas MCB gave 2.7 billion, Allied gave 3 billion. So we are larger than these banks in consumer lending. These are like mammoth banks. So all what they're doing is corporate. Now, when bulk of the deployment is in the corporate banking sector, when you talk about Islamic is a consumer need. A company asking for an Islamic loan or a conventional loan is a different discussion altogether. So for now, to start with, we need to increase consumer lending in this country. It's like hovering around 1%, between 1 and 2%. No economy can get better with this low level of consumer lending, because you're not funding the working capital cycles. So the answer is, it's not Islamic or un-Islamic will have an implication. It's pure lending, credit. Increase of credit will have an implication. And yes, there is a demand for Islamic credit, but overall, the banks will have to come out and start banking, start taking risk and lending. That's not happening right now, unfortunately.
So what is the broad criteria of if I'm a consumer and I want to do some lending? So what is my broad criteria on which I'll be checked whether I am eligible for a loan or not?
Yeah, I can tell you about our sector.
Yeah.
Our mandate is very different from a commercial bank. We can lend up to 150,000 rupees to an individual, which restricts us. Otherwise, if we were also allowed to lend as high as we wanted, we would have been where the commercial banks are.
Yeah.
Right? So, and that's great because the regulation helps us. The criteria. So we deal with individuals, small entrepreneurs, farmers. The mandate is not to give out consumption loans. We should give productive loans. But inherently, few of our loans will go for consumption. Now, you can never really, ensure that doesn't happen. However, the criteria is cash flows. If you're a small entrepreneur, or maybe you're a farmer, you're in livestock or crop. You see, the average life of loans in the microfinance sector, bullet loans, are linked to the crop cycle. Yeah. So I can tell you the loan life for us is 7 months. So we have to repeat it twice in a year, 1.5 times or twice in a year. So the criteria is pretty simple. You need to be a real entrepreneur. We go, our relationship officers go down, they see your business, whatever is it that you're doing. We don't fund greenfields at the moment, but when our balance sheet will allow us to take that level of risk, we will get there as well. That's the eventual goal.
Great. Vidit, any more? Okay, there's one more question. I can see
Yes,
questions now.
you can see. Okay, so
On consumer,
yeah, please go ahead.
could you please enlighten us on consumer lending?
Yeah. Consumer lending, exactly what I was saying, that there has to be more consumer lending. Consumer lending is lending to individuals, maybe small entrepreneurs or us. Like the conventional examples are credit cards, house mortgages, car leasing, and all of that. That started off in Pakistan 20 years back, but everybody got their hands burnt because the risk parameters were not looked at properly. So when the bank started going under, they just took a U-turn, and you just stop doing it, which I think should not have been the case. So consumer lending is lending to you and me. Consumer lending is lending to individuals for productive purposes. And in any economy where there is a low level of consumer lending, the economy cannot have an upward. That's just not possible. So in Pakistan, bulk of the lending by all banks combined is to the government through treasury bills and Pakistan investment bonds. And in fact, when the government is unable to service their debt, they are issuing more paper, which is rather dangerous. And people who are associated with accounting or people on the call today should be aware of that. So this is what consumer lending means. Microfinance, individual lending is also consumer lending. Slightly higher if you go, loans for cars and houses or business expansion are also consumer, as long as it's a small entrepreneur, small businesses or individuals. That's what consumer lending means.
Great. Any more questions, Med, at your side?
Yes. Some people would want to know what kind of career prospects would they be able to see in future in the microfinance bank sector?
Career prospects? Okay.
Okay. Yeah. See, I'll be very honest with you, and I can share the story of UBank. What are we doing here?
Yeah.
And I'll give you some very interesting stats also. Where I'm not boasting, but you need to know that. When I came in 2015, last quarter, the bank had a lending book of 600 million rupees, deposit book of 1 billion rupees, 25 locations, and a loss of 135 million rupees, and 340 employees who were not very happy. Okay, and the impression was that people park themselves in microfinance banks to land in a conventional commercial bank eventually. That was the impression, unfortunately. We had a beautiful year, 2016. From 600 million rupees of GLP, we closed the year at 5.5 billion rupees. From a billion rupee of deposit, we closed at 8.1 billion. From 340 employees, we are 960 employees, mashallah. And from a loss of 135 million rupees, we parked a profit of 95 million rupees with all the expansion. And how did we do that? How did we attract those 700 people? That microfinance is the flavor of the month. Plus, what we did was that I at times call ourselves you Robin Hood Bank, and it's funny as well. Why? Because we are going in exactly the opposite direction of the other banks. What that means is that local migrants in Pakistan, people who are working as domestic staff at your house or in the office or somewhere, they migrate from small towns and cities to larger cities for employment. They transfer money back to their families, and likes of Bank of Punjab, Bank of Khyber, these development banks, they sit on their savings and they end up lending to you and me for cars, for houses, for credit cards and all of that. So the small town people are getting poorer and poorer, and we are graduating to bigger cars, bigger houses, and more, So what we are doing is we are opening branches in urban cities, urban centers, and we are giving good rates on deposits to senior citizens and widows and all of that. That's the segment that we've explored. With high rates, while we're serving them, we are using their money to lend out to the smaller farmers, small entrepreneurs, which is actually having the impact that this country needs. The 86% unbanked people, the 55 million, that's the number if I'm not wrong, not 55 million, 50 lakh children under the age of 10 are out of school, and that's the official number only. So we want to send them back to school, all right? And we want to increase productivity. Financial inclusion has become a buzzword. Financial inclusion, again, is a means to an end. The end goal is better livelihoods. So wherever a microfinance bank is operating, where we're offering insurance, credit, saving, health products, what impact are we having on the education index? What impact are we having on the mortality rates, medical index, and all that? This needs to be quantified, and enough research is taking place now, and we have a research cell internally as well. So if you want to do something for the country, for humanity, and actually and the economy at the same time, this is the place to be. So a lot of younger people have joined us last year, and they're enjoying themselves. The bulk of us, I take the suit off, wear my cargos or a shalwar kameez, and I'm seen in the field every month. And that is where the rubber meets the road. We meet our customers and we actually see what's happening. So I think there is huge potential here.
There is another question that does microfinance has any impact on interest rates? Interest rates.
Okay.
Umar,
the way I understand, if I understand the question, that a lot of talk.
Pakistani interest rates.
Yeah.
Okay.
Yeah. So interest rates have an impact. It's the other way. The KIBOR, the Karachi Interbank offer rate, that is the base rate, which is the risk-free rate per se. Any bank which is out there, whether a microfinance bank or a commercial bank, has to offer a premium for you to take risk with that particular bank on the KIBOR rate. So KIBOR is lowest in 40 years now. Right now it's at 6%. Used to be at 12% 5 years back. So the overall base rate is KIBOR, and on top of that, the smaller the entity is, the higher the rate. And there is economics and whole science of spreads. How much is your cost of funding and how much are you lending at? The difference is called spread. In that spread, you have to cover your operational costs and then make a profit, ideally a profit, and many institutions are at a loss also. So microfinance, as it's growing, yes, but it's growing in the same economy, in the same interest rate environment. So if I understand the question correctly, is that microfinance is usually criticized of having very high interest rates on their asset book, as high as 30%, whereas commercial banks are offering the same similar products, larger loans at 16 to 18%. Why is that the case? The very short answer to that is that the economy in which we are operating, the customers that we are serving, used to go to the local money lender. The margins are very high in crop and livestock. The local money lender would charge them as high as 200%. Again, that does not justify 30% or 28%. The cost of funding for a microfinance bank, because we have to raise deposits in the same market and people are more comfortable putting money in larger banks with more capital at say 8%, but we will have to pay a premium because we are smaller, to get money. So the cost of funding is usually in double digits. And the operational cost, again, our loan size is 35,000-40,000 rupees, so we make 2,000-3,000 rupees on a loan per annum. So we are mass bankers. So the operational cost is another 12-13%. So 11% cost of fund, 12% cost of administration, 1% delinquency. If you're charging 28%, the bank is still running at 3-4%. So that's the business model. So when we scale, we bring it down, and we should pass it on to the customers.
So Omar still thinks that 30% is a bit on the high side.
Of course it's high. But if you look at the margin is 2 to 3%. And the immediate relief that you're offering to the customer who was paying 200% to the local money lender, he or she, they're happy campers. Having said that, once the economies of scale kick in, like in Tamil Bank, I can tell you, when we started off in 2006, and my journey as CFO for 9 years there, our interest rates on the deposit side that we had to pay were as high as 14%. And by the time I was leaving, we were down to 4.5%. So our asset yield, we brought it down to 21%. We started at 38% in 2006. So this is more of a life cycle issue as well. If the microfinance bank had a capital of say 5 billion to start with, but that would have been an entry barrier also, as opposed to ₹1 billion for nationwide license, it would have been a different case because we would have been able to absorb losses for a longer period of time. So it's the whole business model discussion we can have some of the time also.
Great. Any more questions, Medad, your side?
Yes, we have a question. So how would FinTech affect the regulatory environment for microfinance banks in Pakistan?
Okay. See, the regulatory environment is evolving. And the regulation, and it's a double-edged sword. Our regulation has been rather stringent, but that saved us from all the financial meltdowns of 2008 and going forward also, because our central bank did not allow the Pakistani banks to take that level of risk. So fintech is a new concept, but I'm very happy to share with you that our regulator, the State Bank of Pakistan, is very open to these new innovative companies that are coming in. And in many parts of the world, let me tell you, the regulators are very, very, wary of allowing these small companies to work on balance sheets of banks, which is not the case so far that I've seen with our central bank. So they will not have any direct implication on the regulator per se, but the regulator is open to alter regulations and give these entities room to write on the balance sheets of the banks and formulate those linkages that we've been talking about. So we have a friendly regulatory environment that will allow fintechs to operate. This is my field.
Okay, great. Okay, this is, I guess, the last question from my end. We know that everybody is moving towards app-based products. So, are there any plans to initiate any app-based product for UBank?
Yes, apps, and over the last 3-4 years, the smartphone penetration has increased thanks to China or Chinese, because it's affordable now. You can get a smartphone in less than 10,000 rupees now, which is great. So every month, I would say, tens, hundreds and thousands of smartphones are increasing. Apps work on smartphones only. If you would ask me this question 3 years back, I would have had a different answer. Looking at the way the smartphone penetration is increasing, it is only natural that we should move on mobile apps also for all our products. So for UBank, our application, the basic app is already there. We are doing some customization. Unlike HBL and UBL, who are doing branchless banking by the names HBL Express and Omni on their own agent network, they're working on mobile apps. We will have a USSD channel of Uphone to offer UPESA that we're doing now. On top of that, we are bringing out our own app also, which will be telco agnostic. What that means is, by the use of the app, any telco customer, or even if you're not using a mobile phone, but you'll have to get a smartphone for this purpose, or you could be using any service provider can have a UPESA wallet and do all the transactions. So we're getting there, inshallah, next quarter, second quarter this year, UBank is going to come out with their mobile app for branchless banking. That's the direction we're going, right?
Fantastic.
Okay, great.
I think, yes, Omar, indeed, CPEC is coming here too soon. So, any conclusion comments from your side, Midit?
I think that's about it from my side. But I see one question from Zahid Munir. I think we can take that question and then we can conclude the session.
Yes.
Yeah.
So, he's asked. If you can see,
it's on taxation. Okay. Yes. Very pertinent, very relevant. The banks, the telcos, branchless banking players, and some of these fintechs have been working very closely with State Bank as well as FBR and PTA, all three regulators over the last year. UBank has had the privilege of being part of 2 subcommittees that Mr. Isagdar has made for Financial Inclusion 2020. And we have written 2 white papers on taxation to the government. UBank did that. So what's happening is the current regulatory environment in terms of taxation, I'm talking about the FBR here, is not very friendly towards having money, because you have to pay heavy FEDs and withholding taxes on these payment transactions and all. And depending on the channel you're using, whether using an ATM or a mobile wallet, the taxation regime does not make a lot of sense right now. So that's keeping a lot of money away from the formal sector also. The FBR, interestingly, has been very open, and we've had multiple iterations with the FBR, and they're willing to look at these things, because since we're talking about bringing the masses onto, for instance, if you're deducting 16 rupees or 15 rupees on a 100 rupee, 200 rupee transaction, that's a lot for the clientele we're talking about. So FBR is looking at it from a different lens, and we are very hopeful that there will be tax relief for the kind of transactions we're willing to do through these fintechs.
because helps their portfolio as well of creating more transparency.
Absolutely. And more and mass volumes,
Yes,
bigger volumes,
yes.
So they're open to that, and we are hopeful that together as an industry we will be able to lobby our way through to get people in the net.
Fantastic. Thank you. I'm just going to read out one final comment from Umar. I'm positive on our economy, and it makes a lot of sense that initiatives like microfinance will not only improve the economy over the longer run, but will also develop entrepreneurial mindset in Pakistan. Absolutely, and exactly the kind of thought that we want our affiliates to think about, that your opportunities are not pretty much, they're not pretty much centered in a shell. So you have the entire ocean open for you. It's just that you have to be on the outlook for opportunities, do your research. I'm very happy of the 6 people who have joined today's session versus the 41 that registered. Midit, you will have a word with them as well. But we are going to, we will make this recording available. And absolutely, traditional job, absolutely, Umar. So we like your enthusiasm. That is why you are on the YLP forum. Kabir, we're going to use this recording that we have done for today's session, and we're hopefully going to put it up on our Vimeo channel as well. Thank you so much for your time. Thank you, everyone. Midit, any final comments from your side before we log off?
No, just special thanks to Kabir for taking the time out for conducting this session. I think it was a great input for all the attendees who were there, and those who missed out, they really missed out.
Thank you.
Absolutely. Thank you, Millet. Take care, everyone. Good evening. Bye.
Thank you. Take care.